Glad to have you back. In reactions to recent claims by President Muhammadu Buhari that the economy under the current administration is better than it was in 2015, experts have noted that the growth of the rest sector and the overall economy over the period declined. According to them, rising energy costs and a falling naira have ensured that manufacturers spend more to source for FX to import input and operations, hence the reason local manufacturers cannot produce at internationally competitive prices. While global financing conditions have remained tight, synchronizing neatly with monetary policy tightening by systemic global central banks as the inflationary pressures proved to no longer be sustainable, putting Nigeria further in a tight condition. Well, to further analyze this trend and what to expect in the second half of the year, I'm being joined right now by Dr. Muda Yusuf, Chief Executive Officer, Center for the Promotion of Private Enterprises, CPPE. He joins us via the telephone now. Thank you, Dr. Muda. We appreciate your time once again.
Thank you very much. Good morning, Frank.
Yeah, good morning. Now, the first half of 2022 seems adventurous. Let me put it that way, and of course comes to an end in a few days from now, giving way to the second half of the year. So what are your assessment of the first half of the year in terms of economic performance and of course the present, where we are now?
Well, the assessment is not particularly favorable or not particularly positive. Because of some of the factors that you alluded to in your intro to this program. All the major indicators or major factors impacting on businesses have been on a negative trend in the last few months. The energy situation has been extremely bad, almost unprecedented. When we consider what the cost of diesel is, what the cost of gas is, and the recurring fuel queues all over the place. Also still on energy, the rate or the frequency of grid collapse, that is the transmission grid collapse, is also extremely high. We haven't seen this kind of frequency in a long time. So from the energy front, again, when we talk about energy, quite a number of small businesses depend on generators, diesel generators. Most of the trucks that we use for logistics are also dependent on diesel. So from the energy perspective, the situation has been really, really bad. So we cannot score the performance of the economy any good at all from the point of energy. Then from the point of view of credit, the government, particularly the CBN, has done quite a lot, we must acknowledge, in the area of development finance, making credit available, especially to those who are in agric and those who are in manufacturing. In manufacturing, I think the biggest beneficiaries are those who are in the middle level segment of manufacturing. For those in the lower cadre or the lower segment, they still complain a lot about access to credit. So overall, we can give some average performance score with regard to development finance. But with regard to the general financing, generally in the economy, the situation has not really improved. Because most SMEs still complain about access to credit. They still complain about the challenges of meeting the collateral requirements of the bank. They still complain about the fact that the cost of funds is still very high. So in the financing space, the performance can only be the average just because of these intervention funds. And again, there are also arguments that even the quality of the intervention funds are something that we should also interrogate, because even the CBN itself has admitted that the default rate particularly in the agri space, is extremely high. So, and for the regulatory environment is a bit tough because most of the regulatory agencies are chasing revenue, rather than even regulating. The drive for revenue is not taking precedence over, the need to ensure, the mandate of ensuring that you have a very good environment to function, to ensure quality and the rest of that. So this revenue drive by all these agencies is putting a whole lot of pressure on business, particularly the small businesses. So all of these things are then on the macroeconomic front, things like inflation. Inflation is one of the biggest problems that we encountered over the last couple of months. It's high and it's increasing. So both businesses and the citizens, everybody is complaining. Everybody is, expressing concern about the challenge of inflation. So if you look at all of these parameters, obviously you will not say that the economy has done well as such. Then on top of that, you have problem of insecurity that is not abating. That also has implications for employment, because all these people who are in agriculture, and they are the people sustaining our food supply, even though they are peasant farmers. Many of them have been driven out of the farm. They are afraid to go to the farm. Some of them are being levied by the terrorists before they go to the farm. So there is almost a complete collapse of security in some parts of the country, and that is also taking a toll on the economy.
All right.
So it has not been too good really.
Okay. Let me I want us to dwell more on the issue of cost of credit that you talked about earlier. Of course, just before the CBN reviewed the interest rate, of course, we had the bank played with a lot of funds. I mean, the cash reserve ratio was still left at 27.5%. And so we expected that could have made a difference. Did you think that, that didn't impact on the cost of funding? I mean, that should have impacted on the cost of funding instead, but you said the cost of funding went up. What do you think went wrong? What was missing? Because with that parameter, the banks had enough funds to play with.
No. I think it's the opposite. Because the CRR at 27.5%, this is extremely high. It's very high. And when you take that in conjunction with the fact that the CBN also increased the MPR at the last NPC meeting.
Right.
So that has further compounded the problem. So all the things that have happened in the monetary space, apart from the issue of cash to deposit, lending to deposit ratio (LDR), which was at 65% and all of that, all the key parameters or regulatory measures in the monetary space has been towards tightening of monetary policy. There is all sorts of issues now in the global economy. You have the normalization of monetary policy in UK, in the US, in the Eurozone, and so on. So globally, there is tightening because of the ravaging inflation. So that has also been extended to this environment. So the CBN is now in a tightening mode, and that has led to an increase in interest rate. So for those who are already indebted to the banks, many of them have now been advised on a new interest rate. They have increased their rate. For those seeking to get new loans, they are likely to get it at a much higher rate. But I must admit that some banks are doing a few programs, either for women, for youth, and all of that, with a much lesser interest rate, But generally in the economy, the interest rate is on the upward trend. And when you take that in addition to the surging energy prices, in addition to the depreciating exchange rates, because in the parallel market now, exchange rate is over 600. Even though we have it at 416 or 417 in the R&E window, how many people are getting it at the R&E window? So the fallback position is the primary market. So that is also driving up the rate.
Okay.
And for those who want to source do serious business like the oil marketers, they have been complaining that they cannot even access it. So all of us are dependent on NNPC. That's why we are having all these fuel crises, diesel crisis, all these crises all over the place. So there's a whole lot of challenges around the issue of costs and inflation and the management
I want us to,
of the whole process.
Yes, just pardon me to jump in here. I just want us to look at some key issues or areas that before I let you go on the show. Let me take you back to the energy that you talked about, from aviation fuel to diesel, cooking gas to, kerosene. The prices have gone up by almost, 180%. So let's talk about the implications of these. Do you think this is likely to change?
It's not likely to change in the near term, in the short term. It's not likely to change. Because first, the primary cause of this is this Russia-Ukraine crisis. That is not looking as if it will end very soon. There is the issue of the sanctions by the US and EU on Russia. That is not likely to change anytime soon. There is the problem of the exchange rate depreciation, which is also impacting on the importation of some of these energy products. That is not likely to change. Then there's the problem that the marketers have been complaining about access to foreign exchange. Because what we are dealing with now is a monopoly situation. That is why the matter is so complicated. Even if the landing cost is a bit reasonable, the market price is extremely high. So, for as long as you have this monopoly situation, even though some elements of those things have been deregulated, there will still continue to be a crisis. Because the value of the regulation is for there to be competition. If we deregulate and there's no competition, it's worse than not deregulating at all. That is why there's so much exploitation in this area of diesel and aviation fuel. So there should be a way to manage our foreign exchange policy properly so that there can be equal access for all economic players at the foreign exchange window, the official window, whatever the rate is. It doesn't have to be 416, but let there be a level playing field so that anybody that wants to import legitimately can import, so that you can have some competition. If you have some competition, there will be some moderation in prices, there will be reduction in the exploitation that is taking place. Then concerning PMS, we have seen the resurgence of skills and all of that. This 165 is no longer sustainable. Prices are going up, cost of haulage is going up. The marketers are picking the product from the depot at almost 160, 165. If they want to sell it at 165, how can they remain in business? Some of them are lifting the product from Lagos to the east, to the north, and all of that. They have to pay for transport at a very exorbitant rate. So we have to be very realistic in some of these. Even if we are not fully deregulated, we need to adjust some of these thresholds so that people can remain in business, so that distribution can be a lot more efficient than what it is.
Well, one would thought that the other sectors for other products, they've been deregulated. For instance, subsidy has been removed on aviation fuel. Also talked about, diesel, of course, as well. I think the only thing that we're still paying subsidy for is, of course, the premium motor spirit. What lessons have we learned from these products that we're not paying subsidy for, or that the government is not subsidizing for, and now the government is contemplating on also removing subsidy for petroleum? And so how do we address this issue and ensure that we have a balanced economy where there is competition, healthy competition, as a matter of fact?
You see, we need a very effective competition framework. If we deregulate and there's no competition, we are taking us back to square one. Because now, if you talk to labor now, they have a good reason to resist this removal of subsidy. Because they will start the example of diesel. They will tell you that, okay, you said they should deregulate. See what is happening to the price of diesel. So if we deregulate the PMS, what is the proof that the price will not go to 600 or 700? It is a legitimate argument. So if we are deregulating, we should deregulate properly and ensure that we allow a lot of private sector players to be in that field. So if anything is going to even happen to the PMS, if we don't get the competition framework right, it will be a major crisis.
Let me quickly jump in so that I can continue from that thought. I just thought that you jump in with these. There is an issue of the PIA that has also been suspended as well. That, of course, was supposed to be in effect by now, but then it's been suspended as well. So a lot of people thought that the PIA Act should have been the solution to the oil and gas sector, whether you talked about refining locally, domesticating the production of crude oil here, and also in terms of payment and all of that, everything will be done domestically. Do you think we made a mistake in the first place in suspending that particular act?
Well, we didn't make a mistake, but the environment has to be right for you to implement the policy. Now you have an environment now where none of the refineries are working. You have an election coming up. You have poverty that is biting very hard. So you want to implement the PIA in full. And let me also say that what happened was turning a total suspension of the PIA was a partial suspension. Partial in the sense that it is only the component that had to do with the deregulation of PMS that was suspended. All other components of the PIA are being currently implemented. You know, the structure of NNPC and all of those things are going on. You know, but for the PMS, we don't have the right kind of environment, particularly domestic production. We don't have an environment where all the players in the industry will have equal access to imports, even if it is PMS. Then there's no point. There's no point going ahead with it.
Okay.
Because it will turn the whole economy upside down.
Okay, let's look at it's a pre-election year, Dr. Muda. I mean, a lot of people were expecting that activities will be coming up. Some of the top political parties already produced their, aspirant, or will I say candidate or flag bearer already. And so going forward, what are some of events, key critical events that we should expect to shape the economy going forward?
Well, it depends on who emerges, but between now and 2023, the environment is likely to be focused more on the political scene. The government is likely to give less attention to the management of the economy. Then for those who are investors, I mean, this is a time to be very careful in terms of the kind of engagement or the kind of business engagement you have with the public sector. It's not the time to go and take a very big contract that will not be fully executed within the life of the present administration, whether we are talking about the federal or the states. Because each time there's a change of government, either within the same party or from one party to the other, it creates a very high level of political risk in the economy. Investors may be struggling with policy changes. They may be struggling with the fact that the new administration doesn't respect or respect the contract that was signed by the previous administration. There's the risk of abandonment of projects. So on the private sector side, there's a need to be extremely careful when we are dealing with the public sector contracts or relations at this time, because we are in a transition. Whatever you cannot wrap up before these people leave the scene, it's better to avoid it, because you never can predict what will happen. And on the part of the political parties, is to enjoin them that they should see the government as a continuum. They should not come into the government, whether the states or local government or federal, and begin to dismantle wholesale what their predecessors have done. They are bound to honor existing contracts, especially if they are legitimately put together contracts and so on and so forth. So there are issues to manage on both the public sector side and on the private sector side as we go through the transition period.
Just in 30 seconds, I mean, considering the current market dynamics, you have future expectations and speculations effect as well. What is going to happen, whether there's going to be crises, and so investors are careful and all that. How do you think this will affect the growth of the economy with respect to GDP, growing the GDP? If you can do that in 30 seconds.
Well, it will affect the growth of the economy because the level of risk is higher now. The level of country risk is higher because you have high level of political risk and high level of policy risk. So investors are likely to be a lot more cautious, and therefore this may have some negative effects, on growth, on investment, and investors' confidence and investment sentiment.
Okay.
All of these things will be subdued because of the current environment.
Okay, I think we should leave it there. Thank you so much, Dr. Muda Yusuf is the chief.
Thank you very much, Frank.
Yes, thank you so much. We've been speaking with Dr. Muda Yusuf, the Chief Executive Officer of a CCPE. Thank you for your time on Business Breakfast. You're still watching Business Breakfast coming to you live from our studios. We take a moment, and still to come after the break, 15.64 million liters of petrol smuggled out of Nigeria daily, according to report, as experts argue that fuel subsidy removal will benefit poor majority. We'll take a look at this on the revenue generation drive of the federal government and impact of subsidy on the economy. Well, that's our focus next when we return from this break. This is Business Breakfast.